Hello traders, Lance Saputo here, and I'm looking here at a 4-hour chart of the E-mini S&P futures. So we're seeing what is going on in this market. Well, we see the S&P still, continuing to really move higher. If we see 20 points, 12 points, 10 points, we're just holding up very, very well here in the markets. The Russell 2000 today, Wednesday, really outperforming. The Russell up about 1.5% or about 20 points here. So Russell 1400 approaching. Um, Something to keep an eye on though. We had some FOMC minutes today. The market kind of light is volatility. Looking at the VIX sub 12, we're seeing the VIX continuing to grind and to grind lower, whether it be the spot VIX, the VIX futures, really starting to break down. VXX, new low, UVXY under 7. Volatility is extremely cheap, and I can say this, every day of the week basically, and volatility. But we are, if we look at a market cycle here, we are starting to, and I mean really starting to get in this euphoria stage. And what I mean by this is, we had uh, optimism, we had some excitement. You could call this, thrill after the election bump up there in the market, and people feeling like geniuses holding stocks. And I think we're right here at this stage here of the market cycle. Everything is just up, up and away. Dow 20,000 approaching. So what happens from here? Well, I think the good times roll. Do we continue to roll for a month, a week, 6 months, a year? I don't know. I take it every day at a time. But what I do think is the Fed will start to be aggressive in raising interest rates. And we're going to go from this euphoria stage, I think, and this could happen around all the big momentum names reporting earnings. I think we'll have them miss and the market start to fall. People try to buy the dip just like they did at Amazon, Facebook, and Google, and really never got rewarded for that. And we'll go in that anxiety stage. Um, and once we get there and that nervousness, I think this market really starts to get shaky. So I don't want to say, hey, go out, sell everything, look at volatility right now. But I am saying, it is cheap if you want to give yourself time to go out in the market. The Nasdaq, we are still lagging compared to, let's say, the S&P or the Dow or the Russell. But I mean, if I'm looking at the big stocks that really make up the market, like an Amazon, I don't think this is a bullish pattern. We're kind of just grinding lower. If I'm looking at a Google, which makes up a large part of the Nasdaq, I don't think these are necessarily beautiful patterns. Today we could say one thing, but when you have the market up and Google hunched, and you have Apple in the red, I don't think these are the best names to start loading the boat. Facebook here, these are classic downtrends in the market. If we're looking at sectors like biotech, sure, they're starting to break out to the long side. And I think this is name specific and news driven. But when I'm looking at just the market in general, energy, crude oil making up the S&P, um, I'm not in love with everything up here. So just a big warning of caution um, if you're looking at potential longs. There's some bright spots in the market, biotech, retail today. Uh, but once I think earnings start to come, you just be a little careful with that bullish point of view.